How do you properly originate a real estate note? There's so many mistakes that I see investors make when originating a real estate note. And in this video, I'm going to be talking in detail and sharing with you guys what are the proper steps and what are the proper things to do when you're originating a real estate note, so that in the future, if you decide that you want to sell the note, that you're going to get the most and best value for that note, right? Because at the end of the day, what we're doing is we're trading paper, right? That's what a mortgage note is. It's a document, it's paperwork, right? So it has to be structured properly. If I'm out there selling a property and I'm offering seller financing, one of the most important things is doing things properly, right? And as crazy as this sounds, I've actually had conversations with sellers that haven't even pulled credit for somebody that just told them, hey, I have bad credit, but I have $10,000 down. And they never even pull a credit report, which to me is pretty crazy. So one of the very first things is doing the proper underwriting to making sure that that person is somebody that you're willing to finance, right? When you're first getting started, you may not even know what this is, but you want to use a RMLO, right? A residential mortgage loan originator. That's going to help you basically get all the things from the borrower, making sure that they get their credit, making sure that they provide all the information for you. So that's the first thing, is making sure you use an RMLO, which we always have the borrower pay for that. Why? The borrower typically pays for the RMLO. It's on the contract. They typically make it in 2 payments. They initially make half the payment to start the underwriting process, and then from that you can get enough information whether you're going to be able to continue and approve that person or deny them and say, you know what, you don't meet the guidelines, we're not going to be able to approve you, and they just typically pay $500 for that, right? So that's number one, right? Number two is you want to make sure you use a note servicer. This is another mistake that I see when I'm having conversations with potential note sellers, is I like to ask them, hey, do you know what the UPB is, right? What is the UPB? The unpaid principal balance. What is the balance on there? I know this person has paid for the last 46 months or the last 5 years, whatever the case may be. What is that number? And sometimes they don't even know, or they try to have things on a sheet of paper. So what a note servicer does is they keep track of all those items for you, right? They know exactly, they have usually calculators and systems where within a minute, just like you log in to see your mortgage statement, you can go in there at any given time and know exactly how much you owe, right? So get a note servicer, right? So you don't have to worry about even insurance. You don't have to worry about property taxes. They do all those things for you. So making sure that you set up and you go and interview a couple of note servicers, and knowing that, hey, if I'm selling you this house, we're going to use a note servicer, and you, the borrower, Mr. or Mrs. Borrower, you're going to be paying for that note servicer, and the note servicer is typically anywhere from $25 to $35 a month, and the borrower always pays for that. So number two is we make sure we get a note servicer. And number three is making sure that taxes and insurance are escrowed if you're financing a single family residence, right? One thing that a lot of people don't do is they're not disciplined when it comes to their finances, and sometimes they may make that principal and interest payment, right? But at the end of the year, if they're not disciplined, they may not have the $3,000, $4,000, $5,000 a month to stroke a check at the end of the year when taxes are due or when insurance is due. So what we do is we basically make sure that the borrower has taxes and insurance escrowed in, just like any normal insurance whenever you go out and get a mortgage, right? Like for me, when I went and got my first mortgage, the bank made sure to have the taxes and insurance escrowed in there, right? Because it's all part of the payment. I don't have to worry about writing a big check at the end of the year. So it just makes it a lot easier. So making sure that your taxes and insurance are escrowed, because I see the problem where you, as the lien holder, if the borrower is not making those tax payments, you're gonna have to write those checks, and you don't want to get into a situation where you have to, you know, put $2,000, $3,000, $4,000 out of your pocket to make sure taxes are caught up and whatnot. So it's very, very important to make sure you do that. Make sure that taxes and insurance are going to be escrowed. That's part of our contract, right? Here in Texas, we use the TREC seller financing addendum that goes over all those items, right? Making sure that yes, taxes and insurance are or not going to be escrowed. We always prefer to making sure that they are escrowed. One of the last things that you guys need to know when you guys are structuring your note and your deed of trust, right, is all the paperwork is all handled by a real estate attorney or a title company. Even though I've done a lot of transactions and a lot of the paperwork looks to be fairly similar, I never want to be making any mistakes, and I always pay, it's not very much, it's only a few $100s to have a real estate attorney or a title company draft up the actual note, because that's the same thing. I've also seen a lot of investors that they create their own paperwork for notes that's typically 1 page, and it doesn't cover a lot of things that should be covered. Most of our note paperwork is typically 4 pages long. So make sure that you hire a real estate attorney that can draft off those documents for you. Title company usually handles that for us. They're gonna handle the note and then the deed of trust, right? Because the deed of trust basically says if the note isn't paid, we get to foreclose on the property, right? It's kind of a summary, but that's very, very important, right? So make sure that you do those basic things just to make sure that you have a good note that we like to call proper paperwork, right? The better the paperwork, the more valuable the note is, right? Because in the future, if you decide that you want to sell the note and you have everything documented properly, you're going to get a higher amount for that note versus somebody that just has everything on 3 or 4 papers, right? So I hope that that has been helpful for you guys. If you're just tuning into my channel for the very first time, I do provide a lot of training and a lot of videos that's going to help you become a better real estate investor, especially in the note investing world. And I do have a free resource. I actually have a free video training for those of you guys that are interested. It's going to be in the link to this description of the very first link. It's a class that I did on note investing that talks about the fundamentals. It's several hours long, but it's going to be in depth and helping you guys get started when it comes to note investing in real estate. So thank you guys for tuning into this video, and I hope you guys have liked it. Please make sure that if you're not a subscriber, become a subscriber. Share this video with somebody that may get value from this content. Until next time, I'll see you guys in the next video.